Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. I've been doing this for almost a year now, since the end of May 2025. And as you may or may not know, the portfolio strategy went through a shock earlier this year in February when I got laid off from my games job. It was honestly a really hard time. I mean, you heard it in my voice in the video where I had to announce it to the channel. But I'm finally happy to announce that that journey is officially over. I finally got paid my 5 weeks owed of unemployment payments from Washington State after all the crazy delays that happened, which we'll get into. But needless to say, it was a huge stress test to my whole strategy, but I somehow came out of it stronger. For those of you who were there with me when it happened, like you saw throughout the good and the bad, how I transparently documented my whole layoff journey to really show how I navigated that difficult period while still investing 100% of my income and living out of my brokerage and really sticking to my strategy. It was my very first layoff in my 17-year career in games. And on top of that, shortly after, the war in Iran broke out and took the market down with it. So it was a really big double whammy for personally and for the portfolio, right? And with the journey concluding, I figured it would be a good time to recap all that happened, put a bow on it for the layoff journey as a final video for the playlist that I made of it. If you appreciate all the transparency and you want to keep this going, give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Make sure you have a read of the whole disclaimer here. As far as the strategy recap, so I won't go over the normal one that I'm doing right now. I'll actually just go over what I was doing during the layoff, right? So when I got laid off, I basically stuck to my guns and I kept investing all my income, even though it was like basically chopped in half from my normal paycheck to my unemployment paycheck. So that was roughly 1.15K every week or 4.9K a month. So I was 100% investing that. And what changed is that I wasn't doing growth and high yield ETFs. I just wanted to focus on high yield ETFs to kind of keep the monthly income growing. So I just focused on the safer high yield ETFs, XPay, TDAC, TSPY, QQI, SPY, Chippy. Yeah, just to kind of keep my dividends going. And as usual, I was kind of borrowing against margin to kind of pay all my bills, all my monthly expenses. So I was obviously putting a lot more on margin because I didn't have as much income coming in. So yeah, my equity dipped a little bit, but yeah, we'll get into all the whole process of everything, right? So I was kind of doing that for the month and a half or whatnot that I was laid off. So let's just kind of go through the whole timeline. I have like this whole thing that we'll kind of go through, like basically through the thumbnails of all the videos I did during that period. And yeah, as I mentioned too, like if you don't know, there is a playlist that I did of all those videos if you want to kind of catch up of like really how I navigated that whole layoff period, right? I made videos all throughout. There's 17 videos in total and there'll be 18 after this one. But yeah, I announced it with this video, right? So I was laid off on February 18th. Yeah, we had a heads up the week before, and then that was like a mad dash to like really get my resume and my portfolio ready to apply, right? So that was a crazy week, honestly. Really stressful, and it was like working day and night to kind of get my portfolio ready before the layoff date. And yeah, that was a hard video to make, honestly. I think you all heard it in my voice when that video started, right? It was a lot going through that. And at the time, I remember I didn't even invest my full paycheck that week because there's just so much going on. I didn't even have time to think about that really. So I kind of held off on it until after I was kind of done all my stuff. But after I kind of sat on everything, yeah, like, because I had to kind of take stock of everything, right? Like I had to see that like what would happen between my monthly dividends and the unemployment. And really, I saw that at the time my dividends were 4.6K a month. I had like, I went through this whole chart there, right? And then I had like 4K a month roughly of unemployment. So there was a little bit of a deficit between what I was making before and then also the unemployment. But I covered a good chunk of it. It was nice that my portfolio cushioned things a bit. It basically gave me like, it reduced the sense of urgency to find a job, right? Which I really appreciated. And I was really glad for my portfolio was there. And like I said, when I started this channel too, like that's kind of the whole reason I started this, to kind of really protect against layoffs. So it was great to kind of see the system kind of kick into gear and actually kind of help cushion things, right? And yeah, and then I was kind of going over all the various options that I could do to kind of help supplement the portfolio as I kind of navigate the layoff, right? So I was thinking about selling my growth stocks, of maybe bring in my HELOC, making my contributions out of my Roth IRA, things like that. In the emergency, maybe bring in my 401k or credit card transfer balances. I kind of went through all that. And at the end of the day, what happened with that is that I kind of did a combo of a little bit of everything, except these red ones. I didn't do that because this is really just break in case of emergency, right? But I did end up selling my growth stocks. I in a way, I did kind of start taking out of the HELOC, and we'll go over why. And yeah, and then also I did take out my contributions from my Roth IRA just to kind of help buoy the portfolio there. And I just let the gains intact to not can't cause any taxable gains. And yeah, I didn't go into like all these pretty much. These were more extreme, but there was a lot of rebalancing that happened, right? So when we got to the rebalance period, that kind of happened in like three phases, right? I decided that like as I was kind of getting a week or two into the layoff, I just kind of realized that like with less income coming in, I just couldn't stomach the volatility as well in my portfolio. And it just made me nervous that I didn't have as much income coming in. So I did a big rebalancing, really. It was a pretty big one. I actually incurred some losses doing it. But in the end, I'll just kind of be carryover losses for the future, which is fine. So yeah, what happened there is that like I did a couple things. I sold out of my leverage ETFs, so things like WPay, Misty, basically when I sold any higher margin maintenance names. So like WPay was one, Misty was one still. As the last phase, I did sell all my single stocks. So that was on the growth side and then also on the high yield side. So I had like NVIDIA, Hood, GOW, things like that, Take Two. And yeah, all that was in the goal to kind of reduce the overall portfolio volatility and kind of reduce the swings, right? Yeah, I just didn't want to have as much volatility going into this kind of layoff period, right? And yeah, from then I just kind of decided to just kind of stick to ETFs and just baskets of stocks, like at best, like maybe a sector, right? Or a specific sector, but no more single stocks to just kind of really reduce the portfolio volatility. And in a weird way, that that kind of worked out nicely with the timing of the war in Iran. Like this kind of all happened in the same time. Like I think maybe this last buy happened like in the middle of like the dip for the war in Iran, but like all these two pretty much happened like right before. So that was nice. Like, so my portfolio didn't necessarily drop as much because of probably some of these higher volatility names, right? But yeah, that rebalancing honestly made me feel good. And yeah, you kind of, if you go back through those videos, you really see like what I was kind of thinking, right? And how I kind of split things up. So you can kind of see how like I split up my Roth IRA buys and whatnot. Yeah, how I rebalance my growth and high yield things, right? Yeah, you can kind of see all my buys there. How I took all my single stocks and then split it between OR and CLSC instead on the growth side, just to kind of help hedge things a little bit with the long and shorts. Yeah, selling out of like Misty and I put that in XPay, selling out of WPay and actually put that into Chippy. And then, yeah, eventually I did sell NVIDIA as well and put that into Chippy. And yeah, all these swaps that I did, right? Kind of documented all that in my Discord. If you ever want to see that in my trade alerts, people always get a heads up of that. And yeah, there are a lot of losses that I incurred from that, right? From just because like some of these were actually like pretty positive in total returns, but then they were negative in unrealized gains, right? But yeah, so these will just be carryover losses I end up doing, or potentially if I ever sell some growth, I can kind of offset those gains, right? And not pay any taxes on that. But yeah, big rebalancing that happened like in the first couple of weeks of the layoff, right? And really at the end of the day, what happened after that is that I decided to actually just kind of keep to the strategy, right? And really just kept investing all my income that was coming in. So my unemployment income, my cash back, my business income. Yeah, there was a couple options I could have done there. I could have maybe just let it go and just kind of paid my bills that way. But I just wanted to kind of see if the system would hold up, really. And yeah, and also one thing that's worth mentioning, right, is, and then, so what was nice through investing that income is that like, yeah, I was kind of investing throughout the whole Iran war dip, right? And that was just kind of nice. And in the end, that kind of paid off given the bounce back that we had in the last several weeks, right? I'm glad that I kept investing in it. And then even then, like, could have been higher had I kept investing in growth stuff, but I mostly invested in like the safer high yielder stuff, which also had like a nice bounce, but not as much of the growth stuff, obviously. But yeah, I just kept doing it. I invested all that income. And I think the key thing to note there is that like I did run into unemployment issues, right? Actually, I forgot to bring this over here. So yeah, I did, as you maybe know if you've been following, like I ran into issues with actually getting my unemployment payments. And yeah, that was really annoying to deal with. Basically, I reported my YouTube income as like side income, which you're supposed to do. You're supposed to report any side income, or if you do DoorDash, things like that. And then that, unbeknownst to me, triggered a manual review, right? And yeah, that makes it so that they need to manually review my stuff and determine whether I will actually get my payments. But turns out, and I couldn't even find this out on the phone because I couldn't reach anybody. Turns out there was like a big backlog because there was just like so many layoffs in Washington this year. And apparently the backlog was something like 14 weeks, right? That before I'd even hear back, which was problematic because I needed those unemployment payments to kind of keep living, right? So the solution I came up with is to actually use my HELOC. And I basically paid myself my unemployment that I was supposed to be getting any given week, right? So I was basically giving myself the $1,152 every week. So just paid out of my HELOC and kind of took the hit of paying interest for that over the last couple months. And yeah, and that kind of put a wrench in my plans because originally my plan was to actually take a few months break before kind of starting the job search in earnest. And if anything, just kind of like supplement my income with like DoorDash to fill the gap. But yeah, that kind of forced my hand to kind of take my job search a bit more seriously and bring it forward. So that's what happened there. And yeah, and it's also worth mentioning too, because this came up in the comments, is that like dividend income actually doesn't factor into income that you need to declare to unemployment, right? That's only something that's relevant for your taxes at the end of the year. But from research, however, if you are getting income from day trading, that's where they draw the line, and that they want you to declare that income. But luckily for dividends, that actually doesn't factor in, which was kind of like a lifesaver, right? To still get your unemployment. So with that, like that made me, really lean into the job search, right? And then also like one thing that I forgot to bring over was this stuff over here. Yeah. So like after all the rebalancing, right? Like, that's kind of where I was at. There was still a little bit of a deficit, but not too bad. At the end of the day, I was bringing in 9.9K and had like a little bit of a $900 deficit to my old salary. So yeah, that was nice. Between my dividend income, so my dividend income lowered a little bit because of just kind of the sales and kind of rebouncing into like safer stuff. So lost like $200 a month there, but just made stuff a little bit more stable and a little bit more safer yielding, right? And that's where I was kind of saying, where like, oh, maybe I would do extra income through like Uber Eats, dog walking, things like that. This never actually happened in the end, just because I needed to focus on the job search because of the unemployment issues. But yeah, just something worth mentioning here that I forgot to bring over to this whole vertical timeline. Yeah, that made it so that I had a big month of a lot of interviewing. Not as much as like you'd expect, like just because I know people that have been laid off for a year or even 2 years and they're kind of applying everywhere. Yeah, it was kind of like a nice comfort to see that I was able to really lean on my network, and I was just very selective to where I applied. I applied to like places where like I knew people, and yeah, that helped out a lot. So really, in the end, I put in a total of 9 applications. Yeah, 3 that I didn't pursue because just didn't have a good feeling after that initial call with them. 2 that like said would keep me in mind if anything comes up. 1 no answer, and 1 that didn't have remote for now, which I was looking for. So ultimately, I ended up doing 2 big interviews loops for the full thing. And yeah, one offer that I basically declined, and then 1 that I accepted, where in the job that I'm at now. So yeah, like I kind of laid out transparently too, I showed how much I had from my old job and then also this new job. So yeah, I was lucky, honestly, very lucky that I was able to kind of actually hit pretty much what I was making before, which was nice. Just a little bit of a hit, but not so much. And there's a lot of extra retirement perks with the 401k matches, HSA, the extra retirement account and stuff. It's a lower annual bonus, but I had got a nice signing bonus, which I all invested, as you saw, right? So really great total comp overall, like 211.8K all said and done. So actually a little bit higher than what I was making before, even with the higher base salary, right? Just because of all the little extras. So yeah, it was a crazy month. Like a lot of interviewing, very stressful. Hadn't interviewed in years at that point, right? But yeah, that was a crazy thing. 30 days, very lucky is how I feel after all that, right? Because I just know how hard the market is right now, and I don't take that for granted, right? That was no small feat. And really after that was like a nice, after I signed that, like I felt like I can kind of take the foot off the gas pedal, right? And it really felt like I could actually finally relax a little bit. And you probably saw after that period, I actually had a lot of videos and had a lot more free time to do a lot more stuff, which was nice. So yeah, and then I was kind of just starting to prepare for like what the new routine would look like, right? I think like going through the layoff like really changed my perspective, right? That made me really want to like, by the next time I hit a layoff, to not be in the same position that I was, where I was kind of really reliant on unemployment. So that kind of made me want to fast track my paycheck replacement even more. Yeah, I was kind of thinking at the time, like maybe even no more growth investing and just focus on safer yielders and maybe just reinvest all my dividends. But I really did put that to the test. I ran projections and stuff like that. And I decided quite not to just fully reinvest in things. I actually went halfway now about that. It's like reinvesting my weeklies, but not my monthlies. But yeah, I just saw that maybe that didn't quite make sense for my risk tolerance. Definitely something I could have done, but it would rack up the margin balance quite a bit more than I'd be comfortable with. And yeah, so it didn't end up quite going that way. But yeah, again, just transparency all the way through, right? Just kind of showing my thinking and how that evolves. And even the growth investing thing, I kind of went back on that too, right? As I got closer and kind of seeing the nice bounce back that we had, I wanted to still be investing in growth a little bit, right? And yeah, and I mean, since I started my new job, you really saw how I've been investing my paycheck with the new weekly routine, and which is nice. I'm getting paid weekly, right? Yeah, so you're seeing all these videos kind of coming down, and I've broken down my full new routine, right? So I'm kind of doing roughly 90% high yield and 10% growth. It used to be 60-40 high yield to growth, but yeah, that's kind of the new routine that we're doing, right? And you've kind of seen that here in this weekly flow, and yeah, definitely check out the video at the top right where I break that down. But yeah, that's the new routine that I'll be doing to kind of hopefully reach early retirement by 40 years old again. Still, that's still the goal. But yeah, in the interim too, I do definitely want to kind of replace my salary as quick as possible, right? That's the big thing, at least a net salary. Just so that if a layoff happens in a year or maybe in 2 years from now from the new job, I don't take anything for granted anymore, honestly. I think the goal hasn't changed there. Yeah, I just want to replace my salary as quick as possible and just kind of safeguard myself in case anything happens, because you never know. The industry is just such a crazy place right now, especially in North America. So, and with that, what I'm happy to say is that yeah, I finally got my payment. I actually randomly logged into ESD one day. I hadn't even gotten an email yet. That's how slow they are. But I finally got paid for all my benefits. So it ended up being actually 1 week less than I thought. I was anticipating 6 weeks because I thought this first week would have been my waiting week, but turns out they did it on the week after. I guess this was a partial week, but I got paid 5 weeks of unemployment, which was great. And actually a little bit less than I thought. I thought it'd be like $1,152 every week. But it seems like my income did affect it a little bit more than anticipated, because from what I researched, I thought that you could make up to what it was called. Yeah, $288 a week of allowable income, 25% of your unemployment income before it starts affecting it. But I guess not. So maybe my research was wrong there. But yeah, finally got that paid. And basically what happened is that I took that money straight and put it to the HELOC and paid that off, right? As far as the money that I took out. So I still have a balancer that I need to pay off down the line from all the renovations. But yeah, that finally happened. And that kind of puts a bow on the layoff journey, right? Yeah, it was a journey, let me tell you. You kind of see the whole process, right? And like I mentioned, you can kind of see all of this for yourself in detail if you check out this layoff playlist, right? And yeah, I mean, at the end of the day, some lessons learned that I got from the portfolio, right? At the end of the day, I'm incredibly grateful my portfolio was there to cushion the blow of the layoff. It gave me a bit more peace of mind as I job search, and I really didn't have to take the first thing that came across out of desperation, right? I've had some coworkers, unfortunately, that had to do that. But for example, one of the very first calls that I had, they were offering way below what I was making previously, 120K or something. And then I was just I ended up passing on that one because I was a little bit lower than I wanted. I knew that I'd have to take some sort of pay cut, but I wasn't hoping for that low. I was hoping maybe somewhere in the 140, 150K range. But yeah, at the end of the day too, do I regret rebalancing my portfolio, especially with the bounce back that we had? No, honestly, I'm happy that I did. And I think that's something that might be something for people to consider, right? And I think maybe that's what I learned. It's maybe you should build your portfolio for the worst case scenario, right? In that, is it something that you'd be happy to hold if the worst happens, you lose your job and you can't be investing anymore? So I think that's what happened with me, where yeah, do I want to deal with this volatility when I don't have as much income coming in and being able to kind of buy those dips on those holdings and things like that? And yeah, I think the answer for me was no. And then in the end, I think I might actually just stick to ETFs potentially. We'll see if I ever get into single stocks again, potentially. But for now, I'm very happy with the kind of the volatility I've had over the last kind of couple months with just the ETFs. And yeah, now I'm in some specific sectors with semis and DRAM, things like that. But yeah, at best, it'll always be at least a basket of stocks just to kind of help diffuse the risk, right, a little bit. And yeah, the big one is just don't be afraid to kind of, if you need to make that hard rebalance, do it, right? Whatever will make you sleep better at night. And I think for me, this kind of helped me sleep better at night. So yeah, I did take some losses there and realize some losses, but again, I can just use that for taxes. So I'm not as worried, just because I've used carryover losses before, and you can kind of see how that can affect things down the line for later years. So that's some of the big lessons learned there with the layoff. It's crazy looking back on all this, right? I think some stuff kind of came from an emotional place, but I'm happy that like I kind of stuck to the system, still kept investing and still kept to the strategy, and it's actually worked out good. And I mean, you see how that's played out since with the bounce back, right? Yeah. And I mean, that this kind of speaks for itself, right? With like how stuff has progressed since, like kind of stuck to it, was investing through the dip here. And then, yeah, just kind of had this like monster bounce back there. Like at the dip, I was like at the lows, I was down 15.73%, 28.6K, which hurt a lot when you're laid off, right? But kind of kept investing, and then that's has bounced back nicely. And yeah, throughout I was kind of still bringing in income, right? Still bringing in my monthly income that was kind of help buoying things, right, through this period. So yeah, brought in like 3.8K in February, 4.4K in March, 4.9K in April. So things still kept growing. It still kept the portfolio fueled, even though it was like a little less than it was normally. And then, yeah, it was worth mentioning too that my equity had dipped below the 50% threshold that I normally do. And then I just kind of stayed okay with that. And I didn't want to change things up too much in that sense, because I knew the job was coming at that point, right? So I had my signing bonus, all that coming. And yeah, between that and the bounce back, like now my equity is like in the healthy range at 55, and I want to just keep getting that higher for sure. But yeah, that was a key thing, right? And yeah, I think sometimes you need to make special exceptions, right? And that was one where I didn't want to necessarily stop investing and just kept doing it. But really, like if you want to watch to see how this whole thing played out in real time in order, you can just check out this playlist. I'll add this video to it after this is done filming as well too. But yeah, I hope this in-depth looked in the whole journey. You appreciated all the transparency and the vulnerability that came with it. It really was the first big test of the portfolio between the layoff and the war in Iran dip, and it was great to see how the portfolio and strategy held strong throughout. It kind of gives me more confidence that this is something that I can do for the long term. At this point, I feel like the one big thing I'd want to see before I fully like retire early on this is try to like really see it go through a big drawdown, like potentially like the 2022 tech downturn where like it drew down like 32% over a year, right? Or potentially even like worst case, like a flash drawdown like in 2020's COVID crash in March where things went down 30% in a month, right? Yeah, I want to see if like the portfolio can hold up and I can kind of get it to a point where it can survive that. And yeah, still just keep investing through those lows, right? Like the whole idea behind the portfolios is to basically make it so that like I'm always investing and I'm putting all my income, every penny, whether the market's good or bad, especially when it's bad. I'm excited to kind of keep buying, right? And to be excited for the bounce back from there. But yeah, I mean, until that happens, I'm sure it'll happen eventually. You know, I'll be here showing it transparently, good or bad. And yeah, you'll see, as always, how I transparently go through all that on the channel, right? And how I navigate everything in real time. You'll see that all for yourself. So yeah, if you appreciate this transparency, definitely give a like and subscribe and hit the bell notification to be notified about future videos. As usual, if you want to support the channel, the best way to do that is to check the description below. You'll have all my free and paid links, right? You'll have my free Snowball portfolio link. This will always stay free, where you can kind of see my full portfolio, right? Yeah, you'll see all the same numbers that I show in, week out. Right now, the Discord is still free. Still debating whether to make this potentially gated behind the Patreon and YouTube membership for full transparency. Hasn't happened yet, but definitely join in while you can. And yeah, my free Blossom social profile. And then I recently did switch my portfolio spreadsheet tracker to paid. So now it's like a little $5 minimum, or you can give more if you want. But yeah, it's been free for a bit. But yeah, just want to switch that over. And yeah, there's a Patreon and the YouTube membership. But yeah, that's how you can support the channel. And yeah, until then, we'll catch you in the next video. Again, this is a big week. It's the 1 year anniversary since I started the strategy. So yeah, as usual, we'll have the full paycheck investing video on Friday. There'll be a special video on Saturday going over the 1 year anniversary and kind of just looking back on the year and kind of look at all the numbers and how we did. And then also the usual weekly portfolio update on Sunday. So it's going to be a big week of videos and kind of closing out May strong to kind of celebrate the whole week, right? So yeah, I'll catch you in the next video. Peace.